Tom Lee.
Tom Lee.
Tom Lee.
Tom Lee.
Tom Lee. Tom Lee dropped another bombshell, and that's why Bitmine is absolutely exploding. 50% the other day and another 6% before the market opens. And in today's video, we will talk about what he said. I watched hours and hours and hours of content of Tom Lee, and I simplify it for you so you make your investment decision. So make sure to smash that subscribe button, smash the like button. If you don't know who I am, my name is Danny, and I was very early on Tesla, for example. I look for X10, X20, X30 stocks that absolutely explode. This is my specialty with my team and me researching all of those crazy things. And, you know, my subscribers got rewarded. Like this guy bought an house in the US, or this girl bought an apartment in Stockholm. So if you are here to find the next X10 stock, you came to the right place.
Welcome to the game, I'm the wolf of Dubai.
Before diving into the video, make sure to check out X10 Day Trading, where we developed our own software to send you all our day trades all automatically into your portfolio. If you have $10,000 or more, then you are eligible to join us. Schedule a call with me personally on x10daytrading.com, and we see if we can help you as well. Let's dive into what Tom Lee actually is. When I invested into Tesla, when it was a $17 company, and then it went all down to $6, and I put my life savings into it, okay? And this is the proof. Go to my first video ever, and I was there. It looks like a hostage video, very bad quality, very bad hairstyle, but you can see that I have the talent to find rare and exploding stocks very early. And you are extremely early into the Bitmine BMNR is the ticker symbol journey. And I will talk about Tom Lee being the Elon Musk of Bitmine. Okay, think about the following. When I invested into Tesla, you want to have a CEO, and you see the same pattern when I invested into Hood early or Palantir. The CEO is the one standing image of the company. And what Bitmine is doing so revolutionary with a guy on the very top with Tom Lee is exceptional, and this doesn't happen so often, and that's why it's so hard to find X10 stocks, but we find them all. We found them all, like Nvidia, so you can see that this is really something that is really interesting. Make sure, guys, this is never financial advice. You know, make your own decisions. Stocks go up, stocks go down, and make sure you make your own research. This is never a recommendation, obviously, right? So make sure that to understand that Tom Lee is the Elon Musk of Bitmine. And, you know, take the quote, Wolf of Dubai 2025, Tom Lee is the Elon Musk of Bitmine. He is revolutionary in the finance space. He was early on Bitcoin. He was early on giving crazy targets on Tesla, on the S&P 500. He is one genius, and he is very regularly on CNBC. And this is a clip that started one of the mania, and then we will go into a huge podcast that I watched for you and will simplify for you what is the bombshell that he just dropped.
Let's talk about Ethereum, because I know you're very bullish on that as well. We'll get into Bitmine in a second too, but Ethereum specifically, why is this something you need to hold in your portfolio?
Well, to me, Ethereum's having its Bitcoin 2017 moment again. And to give perspective, in 2017, Bitcoin was under 1,000. But that was the year when Wall Street discovered that the narrative of Bitcoin is digital gold. And Bitcoin has gone to 120,000 now. So 120 times increase. In 2025, a couple things are happening around Ethereum. The first is the Genius Act is now making stable coins kind of green lighted, which is the ChatGPT moment for crypto, but it needs a smart contract. So it doesn't work on Bitcoin. The second is the SEC is pushing forward with Project Crypto, which is actually asking Wall Street to move the entire financial system onto the blockchain. Ethereum is the preferred choice for Wall Street because it's had zero downtime since inception, matching what the banks want, 100% uptime. It's also the most legally compliant and secure blockchain because it's recognized in the US and it's the second largest blockchain. And the third is almost all of it is taking place on Ethereum. JP Morgan's building their stablecoin on Ethereum. Robinhood is tokenizing on Ethereum. You know, the custody banks are doing it on Ethereum. So it's really where Wall Street meets, but that's also where AI is meeting crypto. Because as you know, as we tokenize and move towards robots, you need a token economy to control them, which is taking place on Ethereum.
and which is why you're now the chair of Bitmine, which is looking to build out this treasury of Ethereum, not so differently than we've seen Michael Saylor do with Bitcoin at Strategy.
Yes, that's right. So I think that MicroStrategy has written the playbook for what a Bitcoin treasury is, and now he's so big he has a sovereign put, right? He has 600,000 Bitcoin. Any nation that wants to get 1 million Bitcoin probably thinks it's cheaper to buy MicroStrategy. The Ethereum treasury model, which is we're trying to be the MicroStrategy of Ethereum, works similarly, but we're at the earliest stages because if this is the 2017 moment for Ethereum at 3,700, it could make a move to 30,000 or more. On top of that, Ethereum pays you for providing network security by staking. That's a 3% yield. So Bitmine owns over $3 billion worth of Ethereum. When we start staking and it's legally compliant, all within the US, that's more than $100 million of revenue. Of net income. So it's a profitable treasury company. And we've been able to grow our holdings of Ethereum from roughly $4 per share in 30 days ago to over $25 today. So it's adding about 80 cents to $1 worth of ETH every day.
Interesting. I mean, when I think about Strategy, it is really it's the whale in the Bitcoin market just because they have been buying up so much Bitcoin. So if Bitmine is taking a similar approach to Ethereum, where do you see prices for Ether going?
Well, I looked at some research from Sean Farrell, who's our head of digital asset strategy, and he put out a presentation about Ethereum today. So he thinks the ratio of Ethereum to Bitcoin could go back to its 2021 highs, which is about 0.14. That would value Ethereum today at around 16,000, and it's currently 3,700. So he's just saying Bitcoin ratio versus ETH, let's get back to where it was 5 years ago, which makes sense because it's a better story today than it was in 2021. And that gets you, close to 16,000.
So this kind of media attention is exactly why Bitmine will become a retail diamond, a retail, kind of spark in the retail investing world. And this is one reason why I think Bitmine can be huge, okay? Beside the fact, obviously, that Katie Wood, Stanley Druckenmiller, Peter Thiel, or Bill Miller III, all legendary billionaire investors on Wall Street are supporting the vision and going big on the vision, okay? So Peter Thiel have 10% of the company. Bill Miller was early on Amazon, Bitcoin, GameStop, right? And, Stanley Druckenmiller never had a down year in his Wall Street career. So those are all those reasons. But when Tom Lee speaks, you need to listen very, very carefully because he says for once that you shouldn't be subscribed to this channel and smash the like button. But he says that actually Ethereum has its moment. Have a look.
Well, we've learned a lot. I don't really want to say too much because as you can imagine, we've probably been one of the largest buyers of ETH. And we've learned a lot. I would say in the short term, where fair value for Ethereum does not play into what ETH does short term. I mean, look at it. Last week, it got to 3,300 on because there are folks who have liquidation levels or they're doing pair trades or people think Ethereum's a dead chain, so they're betting on another chain and trying to force levels of liquidation. I think that that's the dynamic near term, but wasn't that Bitcoin at $1,000 in 2017? Actually, if people go back to 2017, because I think Ethereum is having its Bitcoin 2017 moment this year, where Wall Street is finally getting behind ETH. Bitcoin was 1,000 in the early part of 2017, and it was until August, and then it went straight up. I mean, literally went straight up.
So as you can see, because of the developments in the current situation, Ethereum can be quite the biggest deal on Wall Street. Wall Street finally understands Ethereum can be bigger than Bitcoin. It can be the new wave of crypto that's going absolutely nuts. We will talk about that Ethereum can, and according to Tom Lee, go 100x from here. Okay, so a 40 trillion market cap for ETH. Imagine what that means for Bitmine. Bitmine would go like 1,000x, okay? And this is exactly the opportunities that you want to be early on, and you are early. And make sure to listen to the next snippet because this is even more interesting.
MicroStrategy's strategy for bootstrapping itself into buying more Bitcoin and accumulating more Bitcoin. Ether treasury companies have a bit of extra tools in their tool belt, simply by nature of what Ethereum is, right? Ethereum has like an on-chain DeFi ecosystem that Ethereum Treasury companies can actually leverage. So my question to you is, what's your strategy for accumulating more ETH using the additional tools at your disposal? Because all Treasury companies are leveraging the mNAV premium in order to accumulate more respective assets under their balance sheet. But there's other strategies beyond just kind of like extracting the premium to accumulate more Ether. What else? What other strategies? Ignoring the mNAV premium, how else do you get Ether on your guys' balance sheet?
Yeah, David, of course, you're asking a great question, and I have many answers, of which I can't really share most of them, because whatever strategy we pursue, is some of this is very proprietary. But I would say investors shouldn't oversimplify their thinking around treasuries, because we've become the third largest crypto treasury in the world after Mara blockchain and MicroStrategy. So we own more crypto than MetaPlanet. And so then you realize that companies that are of significant size and liquidity don't simply have to be doing like singular things, so that's probably the difference.
Because many people are, kind of, let's say, worried that they get diluted out of the, Ethereum holdings or whatsoever. And obviously he didn't mention all his specific methods, but he has like a whole tool case of 20 different methods how to increase Ethereum. And one of those is obviously buying more Ethereum by selling more shares. So people ask me, hey, will this not be diluted? No, not at all, because he makes sure that the Ethereum per share grows over time. So actually, let's say you buy 3,000 worth of Ethereum, it goes up 50%. Okay, you make 50%. Now you buy 3,000 worth of Bitmine. Now Bitmine will increase their Ethereum holdings, and by some point will have maybe for those $3,000, $30,000 in Ethereum. So what the stock goes, obviously it match, plus you will get the premium. So this is called the mNAV and the mNAV premium, okay? And currently, not only, Bitmine is the biggest Ethereum treasury company in the world, but they also have a pretty good mNAV, okay? He will also disclose in the videos that, they have much more NAV that they had when he made his last video, where he said the NAV is actually at around $23. It's much more than that. He's a chairman of a public company, so he cannot spill everything out all by one. But, obviously also he mentioned in this clip that he cannot give all of his method and tool cases how to buy more Ethereum. So this will be quite interesting. So let's dive into the next snippet where he talks about mNAV.
Tom, why does an mNAV premium even exist? Can you talk about this? Because I've heard some investors talk about this, and their basic view is the mNAV premium should kind of collapse somewhere around 1, maybe a bit above 1. Of course, in bear markets, it could trade under 1. But why is there an mNAV premium in the first place for any crypto treasury company?
Yeah, can I walk you through that?
Please.
Okay. Because it's a very good question. Okay. I want to start with the numerical thing and then give you the non-numerical. Let's say that someone buys us, and Bitmine is very strict on cost structure. So it's basically with $3 billion of Ethereum, let's say, you're like, okay, you're just an ETF. So let's say you put it at 1 times NAV, okay? But then there's a native yield of 3%. And let's say you pay that out as net income. But let's say you go, oh, well, let's just give it a money market multiple. So 5%, you gross it up. So it's a 20 times multiple of your 3%. Okay. That's adding 0.6 to your NAV because of what you earn on the yield. Does that make sense?
So we're already at 1.6 just because of ETH staking yield, basically.
Then the third, there's 2 other components to value. You have to account for velocity, because when we started the ETH strategy on July 8th, there was only $4 of Ethereum held per share. And now when we announced on July 27th, there was $23 of Ethereum held per share. And it's much higher today. We haven't disclosed it, but it's higher. So it's grown by $19 a share in 20 days, roughly. That's velocity. You have to give a velocity, because when you do NAV, the NAV is growing. So you have to give a multiple to that NAV growing. MicroStrategy is getting a 0.7 for adding 16 cents of Bitcoin a day, but we're doing it 12 times faster. So if you did the theoretical math, we should be getting more than, it should be 0.6, which is MicroStrategy's premium, but 12 times faster times 12. Now, I'm not saying that'll be what's priced, but think about it. That's like 6 points of NAV. So that's just velocity. And then there's liquidity because, after MicroStrategy trades about $3 billion trading a day, we're the second most liquid crypto treasury out there because we trade 1.6 billion a day. Like Metaplanet, for instance, and I'm a big fan of what Metaplanet's doing, but they're trading like, I don't know, $50 million a day. So we have like a quantum log function of liquidity. So that should be worth a premium too. So I think like Bitmine just should be 1 times plus the yield gives you 0.6, so 1.6. And then how much value do you give for the velocity? And we know MicroStrategy is getting 0.6 for adding 13 cents a day, and we're 12 times faster. And then what's the premium you should pay for liquidity? Because liquidity is how you can issue other instruments at lower cost.
So there's a liquidity premium to this product.
And a velocity premium.
So here's the point, guys. The mNAV premium will obviously be calculated of a couple of things, okay? First, you have how much holdings you have, how fast you go with them. You have the velocity, the speed of how they're acquiring Ethereum. You also have the team that is supporting. And remember this chart where I showed you how the mNAV premium went even to 4. Currently, we are somewhere around like 1.5, 1.7 for Bitmine. So even when they just catch up the mNAV premium, the Bitmine, without doing anything, could double from here, okay? Just if the mNAV adjusts to 2014 level of MicroStrategy, okay? So this is insane, and this is the huge opportunity here, guys, and you are early. Don't forget that. And don't forget to subscribe to this channel to make sure to never miss a Bitmine video, because we putting hours and hours of research. We posting every single day. We don't take days off, okay? And if I could, I would put like 3 Bitmine videos out there. I'm the biggest Bitmine influencer out there, so you should stay subscribed and make sure to watch the next snippet, because the next snippet, it's all about the speed of ETH acquiring, where he gets the funds, and also, speaking about Stanley Druckenmiller being an investor.
Premium you get by being kind of the biggest and baddest and kind of like deepest, right? But the velocity premium, which is kind of interesting. Let's dig into that, because there's the velocity of in the first month you've moved 12x of the speed of MicroStrategy. The question though is that sustainable for the next, let's say 11 months, right? For an entire year. Talk about that. So how are you able to get that level of ETH velocity in terms of your purchasing, and can that level actually be maintained?
Well, that's a function of liquidity, right? So it's liquidity and velocity are like 2 aspects of the same characteristic. We're able to have a lot of velocity because of our liquidity. I'll give you an example. So today we trade, like as of 2 p.m., we've traded $800 million of dollar traded volume today. And MicroStrategy has traded, 3 billion. So they've gotten a lot. But Ether Machine, which is the 3rd largest holder of Ethereum, traded $7 million today. So we traded 100 times the volume of Ether Machine. And then like BTBT, I believe they're the 4th largest holder. They traded $49 million today. So you can see there's a huge difference in liquidity, which affects your velocity, because everything that you do to get velocity requires your stuff to be super liquid.
Let me ask the same question for velocity though. So if you're saying, hey, the velocity comes from liquidity, and the question is, where's the liquidity come from? So like, how do you get more of that?
Yeah. So I think, well, that's probably the synergy of the team, because it's myself, as chairman, but our lead investor in Bitmine from the private investment was Mosaics, and they're a really well-known, very smart macro hedge fund. But that's how we were able to attract folks like Founders Fund, and Stan Druckenmiller was revealed in the registration statement as a holder, and of course the ARCs and the Bill Millers. I mean, you have literally the biggest blue chip names in traditional markets and VC backing Bitmine. That's one element, is that it's obviously the people believe the vision. The second is that I've been a long time proponent of crypto, and the convergence, and now, we really argued forcefully in 2017 that Wall Street would care about Bitcoin starting in 2017. That was really the year that it became an institutional product, right? and ownership grew from there. Ethereum is experiencing its 2017 moment right now. And that's, I think that is logical to the folks that know us. And I think that that's helping support what the Ethereum treasuries are all trying to accomplish. Of course, I'm really supportive of like SharpLink and what they're trying to do and Andrew Keys, because we're all doing the same thing. We're trying to stake Ethereum to make it a secure US blockchain. I mean, we're all really working together towards the same goal.
So as you can see, he's saying that the speed is actually something that is their, I would say, moat, right? There's no company ever in the history of Wall Street that created such fast accumulation of a crypto asset. It's faster than MicroStrategy. It's faster than SBET. It's faster than any company in the world ever have done as a crypto treasury. And, this is the winner that you want to back, okay? You want to back those Stanley Druckenmillers. You want to be in the same things like Katie Wood and Bill Miller and Peter Thiel. Like, they know much more than you and me together about the stock market, about investments, about how big this can be. Obviously, they have lots and lots of discussion behind the scenes that we never will get to know. But, there's a reason why Peter Thiel just drops like 9% stake in this company, okay? Bill Miller, not only he invests, but he make a public statement and he risks his reputation that he built over the last 30 years on Wall Street. The same with Stan Druckenmiller, okay? Those people back this guy and this mission, and this is what is one of the biggest reasons for Bitmine and to be early in Bitmine this time. And now let's come to the crazy upside in Ethereum in this snippet of Tom Lee.
And it's hard for me not to see the fractal pattern, because at that time, I remember you back in 2017, and we're talking about like the Bitcoin price. It was something in the 2000s, 3000, something like this. And you would go on traditional finance, as you're doing with Ether now, but you go on Squawk Box or something and say something that they thought was audacious. You'd call, 25K Bitcoin price, 40K Bitcoin price, those types of audacious numbers. I'm not surprised to hear you say, yeah, a lot of people at Wall Street thought we were crazy and they stopped giving us their money for a period of time. But that trade, that investment proved incredibly right. Now we see Ether at similar numbers, right? It's like Bitcoin was, around the 3000s in 2017 when you first started telling Wall Street about it. Well, now Ether is at 3000, which, and you're calling for, I think, some pretty high prices. At least these are blowing minds in traditional finance for ETH. Do you think it could do a similar thing as Bitcoin did? Like, what's your kind of call for a price for Ether right now?
I actually think that there's a bigger upside story to Ethereum. Because there's more skepticism to start with. Bitcoin wasn't necessarily something people shorted, they just didn't believe it. And so the upside case, like when we wrote about 100,000 in 2017, it seemed insane, but it didn't take that long from 2017 to now to get there. It was within our lifetimes that it was 100x. And Ethereum, I think you're hitting it spot on, is just like Bitcoin in 2017. Wall Street is not professionally convinced Ethereum is even a surviving chain, because there was some fair criticisms and it did move to proof of stake, and there might have been too much ETH out there for a bit of time, but it's being fixed. And there's still skepticism that Wall Street going onto ETH, they're even going to stake ETH or even use ETH. Everyone's kind of there are probably more people who think that it's a layer 2 story and nothing benefits the layer 1. And I think that that's what's going to be shattered. And when it does, it'll be a step function. So I think the upside case for ETH is actually higher than, let's say, Bitcoin did 100x. Could Ethereum do 100x? I mean, Joe Lubin sort of has that kind of upside in his mind, because Joe and I are in dialogue. I mean, we are really partners in trying to push ETH as a treasury, as a digital infrastructure. And I think that could happen because there is probably a significant probability that Ethereum could flip Bitcoin as well in terms of network value. And then, if you're, if someone thinks Bitcoin's at $1 million, then imagine what it means for Ethereum, because it is not just Wall Street financializing onto blockchain, but it's AI, but it's also part of the US focus on AI dominance, right? Ethereum plays a strategic role there. Now, if MicroStrategy had triple the upside of Bitcoin, then that means, in theory, the Ethereum treasuries could triple whatever Ethereum could do. So, I don't think you're going to go wrong saying that the Ethereum treasuries are a good investment class. But if you're looking at what Bitmine's doing, it's those other things I was saying distinguish it. And that's why, maybe we will be at the front end of that. But they should all do well, because Ethereum itself is undervalued.
I think maybe you're blowing some minds with some of these calls, even in crypto terms. So 100x of Ethereum at this point in time, would that be about 40 trillion? And you also said that there's the possibility here that Ether actually flippins Bitcoin, which is not canon, I would say, among crypto natives. So there are a lot of ETH supporters and ETH bulls who have believed this for a very long period of time. But in the more immediate term, I don't know how distant that 100x future is. Where do you see Ether price going, say, the end of this year, or maybe even the end of this cycle, if you still think in terms of cycles, if you think this will play out in the next, 12 to 18 months, let's say? Where do you think we go?
Sure. Well, I think the near-term price people should think about is Ethereum getting to 4,000. Because Ethereum is a better story than it was in December, and it was 4,000 in December. So like, to me, we should at least recover to that level. And then Ethereum is a better story today than it was a year ago. And a year ago, Ethereum was at 0.05 ratio to Bitcoin. Right. To me, it's a stronger story, and there's reasons people are using Ethereum. So it's like a narrative. Well, at 0.05 Bitcoin, it's like almost 6,000. So just like saying, give it credit for where it is a year ago versus a year ago, it should be 6,000. But of course, there is going to be a lot happening between now and year end, including, other Ethereum treasuries starting to buy Ethereum plus Bitcoin goes up. So I think by the year end, it's not unreasonable to think 7,000, even 12 or 15,000 could happen. And of course, from there, then in 2026, the Fed starts to follow through on what it should be a dovish pivot. So central bank liquidity is rising. And so Ethereum should build upon those price levels. I don't know if there's a crypto cycle. There should be. It would play in our favor because, again, we'd rather Ethereum. I'd personally think that an Ethereum treasury company wants Ethereum to be flat for the next 5 years and then go up a lot. But it's probably not. It's probably just going to have a step function.
So as you can see, he's talking about the upside of Ethereum and is talking about 100x. And this is insane, guys, okay? He also talked like when he was early on Bitcoin that many of his clients, he has like a research firm, and many of the clients actually said, you know what, we are essentially doing the following, that, we think that Bitcoin will be big. And everybody was like, going nuts because the Bitcoin was early, and in the end, he was right. Will he be right that, Ethereum go to 100x? We will see. But so far, all his predictions about Bitcoin going to $100,000, everybody laughed. Ethereum, he says his next price target is 10, 20, 30, and then 60,000. And then, 100x, that would be $380,000 per Ethereum, which would be absolutely insane. And they having 5% of it, 5% of 40 trillion market cap is exactly $2 trillion company, guys. If this will be the case, and we are somewhere around like $4 billion market cap, you see the insane upside this company actually has. This is mind-blowing. And I know there will be comments, they never do that. And as I heard the comments before. I heard it in Tesla, I heard it in Hood and Nvidia. Don't bother me with that, guys, okay? Make your own research. Decide for yourself if you want to be early, manage your risk, make sure that you say, okay, whatever I put in, it can go to zero. Potentially not, okay? Think about it, how early you can be this time, how this could be different from any other investment that make 10%, 20%. But obviously there's no guarantees in the stock market. Stocks go up, stocks go down. And, also I believe, and I will make this videos, also the worst case for Bitmine, everything. But I think when I see an opportunity, this is what I do, then I have to go big. I have to go big. I have to do double down. I have to average down. This is how I invest, and this is how it changed my life. Okay, so let's dive into the next point.
Like Coinbase, Robinhood, Circle, they're all building on Ethereum. Layer 2s are building on Ethereum. Tokenization is on Ethereum. These narratives, I think, carry a lot of weight when it comes to the value of ETH, the current price of ETH. But when you actually try and unpack the price of ETH, how do you actually do that? Would you think of this in terms of the demand for Ethereum with its transaction fees? Do you think about the demand for Ether as a store of value inside of DeFi apps or for people that want to stake it? How do you unpack the price of ETH?
Yeah, that's a good question. I would probably posit this with David. Have you seen anyone's spreadsheet model explain Bitcoin's price correctly?
I think it's a fun activity to try.
But I mean, in practical
Has
matter,
it ever been done? I don't think it's ever been done.
3 months ahead or 1 year ahead. No one's model has ever served to explain everything. So I would say people who are trying to model ETH based on a spreadsheet are the same people that try to come up with an S&P price target based on their bottoms up earnings model or their ISM. And that's why no one gets the S&P call correct. Because to me, there's a phrase I learned when I first started on Wall Street, which is it takes a whole lot of PE to offset E. People spend too much time modeling the E. That's the spreadsheet thing you're talking about.
Mm-hmm.
but it's actually always about PE. Ethereum's price is not going to be based on the contemporaneous transactions recorded in any single week. It's really the recognition of where that number is 5 years from now. So I would say I don't think people should be building models and saying they can articulate and anchor a view on the price of anything. And actually, I would say that about a stock, because you know what? People would have been stopped out of Palantir and Tesla a long time ago. And yet Fundstrat's been on the right side of that trade because we don't get grounded by that. It takes a whole lot of PE to offset E.
So how then do you estimate the size of this market, right? Do you comp it? So of course you helped pioneer the 2017 Bitcoin is digital gold. There in the comp is what, gold, which is 20 trillion or so in value. Do you comp Ether to something like gold or to a commodity, even like an oil, calling Ether a digital oil? Is that the way you sort of talk about the ceiling value for this asset?
I think that's part of it. I've seen some work done. I actually think ETH is digital oil did a pretty nice job on their report. I'm sure you guys have seen it. I know that the Mosaics team has helped with doing 2 models for Ethereum. One is basically a banking system proxy model, and then another is payment proxy. But at the end of the day, if there's anything I've learned in the equity world, you can't be grounded by a rigid framework. And that is the mistake people make. And I think people have tried to pin me on the S&P like, Tom, you realize, remember when the S&P fell in April and we're at the tariff lows, I had everyone say, Tom, earnings are going to get cut. So your S&P is going to get massacred. And by the way, you notice every strategist cut numbers for the year except us. And then they said it won't recover because the Fed's not going to save you. So there's no Fed liquidity put. And I said it didn't matter because it's a waterfall decline. And guess what? It didn't matter. We had a V-shaped recovery. That was not something that anyone built a spreadsheet for, but it really is an understanding of how markets work and their resilience. And so I would just say for the listener, I'm not against trying to build frameworks, but to me, ETH at $3,600, it's kind of ridiculously undervalued. So maybe that's the most important takeaway, and not trying to give someone a spreadsheet to build for 5 years and try to understand it. I know it sounds like I'm not giving an answer, but I think that's actually the best answer to give.
So the next point is all about demand. And he's talking about the US government. He's talking about the tokenization. And I believe I watched a video of Robinhood that they want to tokenize everything, okay? So think about it. The brokers of tomorrow will offer you to have in token form a piece of a non-public company like OpenAI, or 2% of an apartment building in Manhattan, or maybe something totally different, like for example, a piece of a painting. And you can now, with Robinhood, this will be the key to all the retail investors. And guess what blockchain they build it on? It's Ethereum. And Ethereum will be used like never ever a crypto was used before. So much demand will come to the market. So much, stable coin, the US dollar, and they will use Ethereum. And Bitmine is in the middle because they are an American company made in America. And this is what the US government will support, guys, okay? And just, I'm dreaming here, okay? But one day, maybe the Trump president will stand next to Tom Lee and will say, this guy, made a fantastic job about Bitmine, an American network, even when it's, blockchain and, everybody, verifies everyone and it's not centralized. But you know how Trump and the US love to Americanize everything. But I think this is one of the biggest modes for Bitmine. And now coming to the last point, and before we diving in, make sure to check out xnDayTrading.com, my own product where we created the software. I spent $1 million in creating the software, and the software allows us, when we make a trade on the US stock market options market, then to send it all into your portfolio. You need at least $10,000 to start, and you mirror all our pro traders. And if this is something for you, then schedule a call on xnDayTrading.com with me personally. I'm knowing every member of my group. I decide if this is something for you, if you qualify. Make sure to schedule a call today because we are always limited in places. Now, in the last part of this video, let's talk about bubbles, okay? Not the one that, Margaret Robbie is in Wolf of Wall Street. We're talking about bubbles on the stock market. And Tom Lee has a fantastic explanation for that.
Looking at these treasury companies and all these new entrants going on in this premium to mNAV, and some are even comparing it to kind of investment trust companies of the 1920s. And of course, we know how the 1920s stock market era ended. Do you think that there's a chance that this gets into bubble territory, that this gets overwrought, that the premiums become reflexive up, and then suddenly in a elevator down kind of lose all of this value and cause more systemic effects in crypto into the broader economy? Like, are you worried about this?
Geez, it's a lot to process there. One, going into the liquid equity world, this is the most hated V-shaped rally. Most of our Zooms with our institutional clients is people telling us why the stock market shouldn't be going up and why it's expensive. And every time we get off, it strengthens the case for stocks to go higher because it's a non-consensus view that we should be going up. You need skepticism for markets to go up. If everybody was bullish in the liquid world, that's the top. Just because digital asset treasuries have gone up and you don't own it doesn't mean it's a bubble. A bubble is just your friend making money. A bubble is truly created when everyone is bullish. So if you're bullish, not you, but I'm saying the listener is bullish, and then they don't go up, and everyone's bullish, then that's a bubble. Now, the only way these crypto treasuries get into trouble is if they use leverage. So I would say anyone who's doing exotic instruments, debt structures, unless they're scarce, MicroStrategy can do a lot of things because they've changed the world. And same thing with MetaPlanet, they've changed the world. But the ones that haven't, maybe they're the ones that get into problems. But from what I can see, most crypto treasuries are pretty plain vanilla. So what happens? They just go down in price. I don't think that's actually could cause a stock market crash. A stock market crash is usually a debt problem, you know what I mean? Or an exogenous shock. I'd say we're a long way from a bubble. I mean, if the cost of capital was low, a lot of these Bitcoin treasuries, some of them are trading at NAV. So it's hardly a bubble. In fact, the market's betting that it's oversupplied already. So they only go up if Bitcoin goes up. But you're right. At some point, something is a bubble. But I think that people always declare a bubble and everyone always rings the bell. Fourth inning to the ninth inning, everyone's ringing the bell at the top. You realize you don't really have a top until no one's bearish. And right now, everyone's bearish. Everyone's bearish on ETH. Everyone's bearish on Bitcoin because of last week. And everyone's bearish on stocks because of last week. I mean, if we were at a top, last week's 5 consecutive bearish engulfing days, everyone should have said, oh, nothing. But everybody says this is the top. When you have conviction that paper thin, you're nowhere near a top. Just keep that in mind.
So as you can see, he explains it the way that bubbles are getting formed all the time, all right? We are not near any bubble yet, but imagine we are going to a raging bull market where everything goes inflated. Do you think that they will have an mNAV premium of 1.5? They will have 4, they have 5, 6, 8. And just when and on the same time, they will increase their Ethereum holdings and Ethereum will also get insane. So we have like this 3 pillars that Bitmine and BMNR is made on, and this is absolutely insane, okay? So this is what I done for you. If you appreciate that, make sure to subscribe. I'm dropping a BMNR video every single day, no days off. Leave the comment what you think about Bitmine and if you already invested or not, or if you have questions. I am going through every single comment. It doesn't matter if it's 3 a.m. in the morning or 6 a.m. in the morning or 11 p.m. at night. Every single comment is replied by me and reviewed by me, and I look forward to hear from you. So see you tomorrow, and remember, the grass is greener on the other side.